Good afternoon, everyone. Well, now we've actually started to get some real action coming into these markets. In the last 2 to 3 weeks, we've had a pretty massive sell-off in these stock markets, all on the back of whether Greece will stay in or stay out of the euro, and just generally deteriorating conditions in Europe. This morning we had some rather bad economic data. We had the PMIs out of France and Germany, both very weak in terms of the manufacturing, and then we had a German IFO business sentiment come out 2.5 lower than expected as well. On top of that, we had a slightly worse reading for the UK too, and so at the time we were coming off quite hard in equities, and what do you call it? Spreads were coming off too. Euribor spreads were at lows. The Bund was 144.58, I believe, as a high, and then after all of that, for some reason, we just started to rally on the talk of some sort of intervention in Europe, potential another liquidity injection or something like that, and then all the spreads rallied, and we were always at mercy of those type of moves. When we get to these type of extremes. And I just want to show you a chart of the Bund here, and as you can just see, it's pretty much been one way. This is a 60-minute chart, and this is off the 140 level, and we've sort of bounced below 140 about 5 times, quite a few times before, as you can see, and then we came back up, but on this occasion we just pretty much went up in a straight line. It was a pretty nice trend up, although it didn't, I doubt many people have been long in it, considering how low the yields were. But in this market, what I've learned is that now forget about what the yield is, forget about what any of that sort of stuff is, just trade the chart, pretend that it can go up to 148, in theory, because this is just definitely a safe haven play right now. We've pretty much gone up 400 ticks from about 2 weeks ago, 3 weeks ago, and we traded a high of 144.55, and we've come off a bit, come up about 60 ticks, and now we're trading around this 140 level, which we sort of breached. Which we sort of bounced off initially before coming off 100 ticks and coming back up. So as you would expect, with the big move in the Bunds, we've been having quite a big yield curve flattening, and we've come really flat in the yield curve. The Shatz has pretty much gone as high as it can go. Well, it's record low yield, 0.6%, I believe. The Bund yield is at about 1.4%, and which is very low, considering I thought 1.8 was low. And if we actually look at a chart of the Shatz Bund spread, you can just see it's pretty much the opposite of the Bund, as you'd expect. Like I said, it's a hedge outright, and we've come off from 301.92 to 298.81, so that's pretty much a 200 tick move, 250 tick move to downside, and I think this spread has just become very difficult to play, definitely, and especially if you're looking for any type of mean reversions, which is what you normally do when you try to trade a spread. And so I think the best strategy to do with this trade is just to look for the pullbacks, and then against the trend, and then just go short it. And we sort of broke that, and then we were trading in a range, about a 50 tick range, once we broke that trend, but then we continued a down move on today's data. So to be honest, I'm sort of staying a bit away from this spread right now, because it's pretty brutal. If you can just get it right, it just, the risk to reward ain't quite here for that. But we saw signs of stabilization around here, but again, any sort of move out of the ECB, any sort of liquidity move or anything like that could send the Bunds crashing down, and we could have a big rise up in this spread. And so the same could, this yield curve flattening has been playing all across the curve from the front to the back, and the Euribor spreads have been pretty volatile as well. I'm just showing you just the spread ladder of this today of this spread here, the June 13, Sep 13. Bear in mind, we've been trading between about 2.5 threes to 4.5s for the past week and a half. We broke those 2.5s, we broke 2s yesterday night, and then we even those odd leg possibility for 1.5s too. And I was actually long around 2s, 2.5s, but ended up scratching it because it was pretty brutal on the downside, especially in the morning. And then since then we've actually got the bounce up. And sort of just shows that Euribor spreads do really behave themselves quite well. But you know, sometimes when we're looking in the face of danger and you think that we're going to break out, because 2s has been low of the range and looked like we were going to break out, but we just didn't quite do it, and then we rallied and now we're back into mid-range. And there's the same type of move in the, in March 13, June 13, where we went from 3s, 2.5s yesterday, traded 2s, 1.5s, and you can have as many 1s as you want. And I also got a couple of fills in 05s too. But then we rallied and we got some 2s this morning as well. But again, with this spread, I managed to end up scratching it, so just ended up churning a lot of round trips. But if we look at the back months, they've all pretty much been quite rangy, well behaved, relatively staying in the range, so it hasn't been as bad. But it's definitely, the excitement levels definitely come back up in these markets. The short sterling's been trading pretty well lately too, especially with will they or won't they, with more QE at the Bank of England. But hopefully this sort of volatility continues, and even though it's a bit more difficult to pick the correct levels, but at least there's the volatility to give you an opportunity to get in and to get out. But until next time, good luck with your trading.